Hello friends, welcome back to my channel Finance Eco India. So today firstly we will be talking about the market outlook, how was the market today, and then we will analyze all the companies which have posted their result today, like Persistent and all others. So let's get started. So firstly, we are breaking down the latest moves in the Indian stock market. We will explore index trends, sector highlights, economic indicators, expert forecast, and upcoming trigger to help you stay ahead as an investor. So before that, please subscribe to my channel. So let's dive in. So today's securities finished strongly. Sensex gained 0.66%, adding 540 points to end around 82,726, while Nifty rose 0.63%, closed near 25,220. This rally came to on the back of positive Asian close following a US-Japan trade deal, with investors anticipating further such ties along with progress on a potential India-US agreement. Global market also supported the momentum. Japan's Nikkei surged 3.5% and US indices ticked higher ahead of Fed commentary. Now let's do the sector-wise analysis. So let's look at the sector winners and laggards. So auto and auto ancillaries led gains thanks to optimism around EV and trade expansion. Banking and financial especially private bank rose 0.7 to 0.8%, supported by strong Q1 earnings and upbeat interest rate trends. So let's see what mid performers are. IT and tech services gained 0.4%, buoyed by renewed digital and AI spending. Let's look who were the underperformers. FMCG and consumer durable lagged slightly, indicating softer rural demand on inflation concern. Small and mid cap were marginally negative, down 0.3% as investor rotated to large cap. So today's top stock in the spotlights were Tata Motor, Maruti, Mahindra and Mahindra, surged around 2 to 3%, riding the auto rally. Tata Financial and Bajaj Finance supported the banking rally. Financial were on fire. Colgate India slipped 2.1%, while Small Finance Bank dropped 6% on weak earnings. So let's see the economic indicators. So inflation and RBI rate outlook. Inflation remains around 5 to 6%, keeping rate cut expectations moderate. Market await RBI commentary later this week. GDP and corporate earnings. Q1 earnings continue shaping sentiments. Banking, auto and export-led earnings have been strong. Global trade and currency. The USD NR is around 86.4, with a firm rupee reflecting foreign inflows. So trade agreement. The US-Japan trade pact boosted momentum, and ongoing India-US trade talks are closely watched. So let's see what experts has to say and what their forecast is. Market experts underline two key takeaway today. Gift Nifty future rallied 75 points, signaling a firm opening. Analysts anticipated a range-bound trend in the near term, 25,000 to 25,300, citing earning inertia and awaiting policy actions. So sector call include auto and bank stocks remain attractive on growth and rate clues. IT offers stability through digital transformation demand. Watch small caps for post earning volatility. Events to watch include upcoming RBI commentary and Q1 earning from key captains like Infosys and Bajaj Finance. Okay, so let's conclude. So today, Sensex and Nifty closed higher, boosted by global trade deals and domestic banking leadership. Autos and financial outshined, while small cap remained cautious. Macro signals suggest earning and policy cues will drive coming days. So, what's your outlook? Are you bullish on auto and bank or playing it safe on small and mid caps? Drop your view in the comments. Yeah, you can also comment now. So, let's go to the Q1 results and crucial that are crucial to set the tone for fiscal year and renew how businesses are dealing with macro trends. Today we will analyze Q1 financial year 26 performance across FMCG, IT, pharma, housing finance, specialty chemicals, NBFC and hospitality. So let's dive in. So first company is Tata Consumers. So we will talk about Tata Consumer firstly. So it's India's Tata Consumer is India's FMCG leader behind Tata Tea, Tetley, Tata Salt, Keep, Pantry Staples. Financials. So revenue rose 10% year on year to rupees 4,779 crore. Net profit jumped 15% year on year to rupees 3,034 crore, but missed estimate of rupees 356 crore. EBITDA dropped 9%, margin down to 60 basis point due to tea and coffee cost inflation. So input cost pressure tested margins, outsourcing and price remains key to recovery. So let's see the next company, uh, which is Persistent System. So let's watch what Persistent has done today's result. So Persistent is a fast growing mid cap IT firm focused on AI powered digital service across BFSI, health and high tech. So its revenue grew by 3,334 crore. It is 18% year on year increase and 4% Q on Q increase. Net profit is for 425 crore. It is up by 9.8% year on year and 7.4% Q on Q. EBITDA margin increased by 15.6%. So let's see strategy inside. So 21st straight quarter of growth driven by AI led strategy and strong contract wins of around 520 million TCV dollars, retaining efficiency in a choppy global environment. So Persistent has given a very good result, very good performance. From straight 21 quarters, it is giving a very good result and it has beaten all the estimates also. So might be tomorrow we have to uh, watch for its how it's perform in the market. Let's see. So next company which we will look is Dr. Reddy's. So let's talk about it. So a diversified pharma major known for generic and specialty medicines. Its revenue up by 11% year on year to 8,545 crore. PAT edged up 2% to 1,418 crore, but sequential profit fell 11% and it narrowly missed estimates around 1,514 crore. So pricing strategy insights are why this is happening. So pricing stress in US generics, but strength in Europe and consumer health cushion pressure. So now let's move to another company, Bajaj Housing Finance. So one of India's top housing finance firm by market cap, net profit soared 21% year on year to rupees 5,583 crore. Revenue grew by 18% to rupees 2,607 crore. AUM expanded 24% year on year. GNPA steady at 0.30%. So it shows the robust loan demand and prudent risk control underpin growth. So its performance is also good. It beats the estimate, or you can say it's in line. Results are in line. So let's move to the next company. SRF Limited. It's specialized in chemical and flexible packaging firm. Its financial Q1 revenue increased by 10% year on year, and it's declined by minus 11.5% Q on Q. PAT increased to 432 crore. It's increased by 71% year on year, and it declined by 17% Q on Q. And it has declared an interim dividend of 4 rupees per share, and it's largely it has done a large capex of around 740 crore. So what's the strategy inside? Strong year on year rebound, but Q on Q dip from global demand softness. CapEx signals future growth intent. Now let's move to the another company. So that is Mass Financial Services, another NBFC which has shown a good result. So NBFC focused on micro and small enterprises, recently branched into insurance broking. Let's discuss it financials. AUM grew by 20.8% to 13,298 crore. Profit rose by 19% to 84 crore. IRDIA given note for broking business. So it's a good positive for Mass Financial. So let's see strategy inside. Rapid loan book expansion and diversification through broking strength and further growth plan. It has. So it's a good watch. So now let's move to the next company, Mahindra Holidays and Resort. So Club Mahindra Vacation Resorts capitalized on domestic leisure tourism. Like after the COVID, its business has increased a lot. So if we look at its financials, so its revenue grew by 701 crore. It's like 7.4% year on increase and around 10% decline in Q and Q. PAT jumped to 34% year on year to rupees 7.9 crore, and PBT up by 87% to rupees 26 crore. So let's see if what's its strategy inside. Clear recovery in staycations, robust membership and growth, bolster recurring revenue. Now we have done all the companies. Now we are doing comparative analysis of all these. So let's see, it's comparative analysis of the company. So top movers are financials. Bajaj Finance and Mass Finance lead the surge from a strong loan demand. Cyclic rebound. SRF and Mahindra capitalize on post-pandemic and global demand revival. Margin pressures that is observed in Tata Consumer and Dr. Reddy, challenged by inflation and price compression. So tech momentum. Persistent standout with high growth in mid-cap IT, signaling investors' appetite for AI-centric tech stocks. Now let's see what experts has to say. So Tata Consumer analysts see margin erosion due to commodity inflation and margin remains a key watch point. Dr. Reddy, broker cautious on US pricing decline and mixed outlook ahead. Persistent system, brokering house bullish, citing AI led deal pipeline through margin trail larger peers. Yeah, and in financial, Bajaj Financial and Mass Financials view Bajaj Housing Financial and Mass Financials viewed as well positioned among strong housing demand and sector diversification. So cyclic play is SRF, praise for dividend signal, Mahindra Holidays pick for domestic travel a pick. So financial led in Q1 driven by credit growth, cyclic firms rebounding strongly, margin under pressure in FMCG and pharma, and tech shows healthy mid cap momentum by AI focus. So please comment if you like the content. And so the next company which has given big company IT company is the Infosys. So let's see how Infosys result is. So in 2 minutes we will be seeing the Infosys results. Okay, let's see the. Hello friends, welcome back to my channel Finance Eco India. Today we will do a deep dive into Infosys Limited, one of India's leading IT giants and a global powerhouse in digital transformation and consulting. With a market cap of over 6.5 lakh crore, Infosys continues to shape the tech industry through AI, cloud computing, and enterprise solution. Today we are breaking down their Q1 2026 financial results, analyzing key metrics, management insight, and what's this mean for investors. Let's get started. But before that, please subscribe to my channel. Infosys kicked off financial year 26 with better than expected performance, demonstrating resilience despite global macroeconomic headwinds. Here a detailed breakdown. Revenue rose 8% year-on-year to rupees 42,279 crores, surpassing estimates of 41,767 crores. Net profit grew by 9% year-on-year to rupees 6,921 crore, outperforming the projected 6,719 crore. Earning per share EPS increased to 16.898 rupees, reflecting steady profitability. Operating margin stable at 20.8% with guided range. So let's see segment wise performance. So financial services, it increased by 5.6% year on year. Steady growth despite banking sector cautious. Manufacturing, it increases by 12.2% year on year. Stronger demand for digital transformation. Retail and life science is flat, weak discretionary expanding, offset by healthcare tech demand. Communication sector, it declined by 1.3% year on year. Telecom client delayed non-essential projects. So key takeaway is while most segments grew, retail stagnation and telecom softness indicate selective client spending. What's behind these numbers? Let's examine the three biggest drivers. Large deal momentum, $3.8 billion in new deals, 55% net new. Includes a $1.5 billion AI transformation contract with a European bank. Deal pipeline remains strong at $9.2 billion. Strategic acquisition MRE Consulting, Germany and the Missing Link Australia contributed 40% BPS to revenue growth, strengthened Infosys' local presence in Europe and APAC. Macroeconomic factors, US and European client optimizing cost, higher demand for automation and AI. Weakness in retail and telecom offset by manufacturing and BFSI strength. Attrition rose to 14.4% from 13.2% in Q4, posting a margin challenge. So bottom line is Infosys is outpacing peers due to its diversified portfolio and AI leadership, but wage hike could pressure margins. Leadership struck a confident yet cautious tone. Here's what stood out. CEO Salil Parikh's key message. Our Topaz AI suite is now embedded in 75% of new deals with 200 plus Gen AI project live. We see strong traction in Europe, where revenue grew 6.1% sequentially, while return remained soft. Cloud modernization deals are picking up in H2. CFO Jayesh Sanghakari on financials. Margin held steady at 20.8% due to pyramid optimization and automation. We are maintaining financial year 26 revenue guidance at 1 to 3% constant currency growth with margins at 20 to 22%. Project Maximus cost efficiency program will drive $300 million plus saving this year. So the management takeaway is doubling down on AI in Europe while keeping cost tight. Now let's see how did market and expert responded. Stock performance: share fell 0.8% post earning on profit booking but are up 12% YTD. Outperformed Nifty IT by 5% this quarter. So analyst ratings are Morgan Stanley gives the overweight best in class execution, AI deal justify premium. Nomura gives the buy rating, guidance hike likely if manufacturing growth sustains. Goldman Sachs give the neutral rating, attrition and wage hike could limit upside near terms. So the key takeaway is bull praise tailwinds and AI, while bears watch margin pressure. To sum up, Infosys delivered solid Q1 results driven by large deals, acquisition, and AI growth. Even as attrition and macro risk lingers, what's your take? Will Infosys sustain its momentum? Drop your thoughts below. Don't forget to like, subscribe, and hit the bell icon for more expert financial breakdowns. Thanks for watching. See you in next earning breakdown. Thank you and Jai Hind.